Hey there, everyone. It's Kim Krompass from the Price Action Traders Institute. And today I'm going to be talking to Kevin Hunt. Kevin is our London session leader. Kevin runs the London trade planning session for our membership. And I think that if you listen to this interview, you're going to get some words of wisdom. This interview was done to really talk to Kevin, not about who he is and his journey. We've done those interviews before, but more, we wanted to get inside of his head and find out for him what he sees it takes to become a successful Forex trader. I think a lot of you can probably relate to Kevin and will really enjoy this interview. He drops a lot of jewels and nuggets in the interview about what it takes to be successful, what traders do to sabotage themselves, and what they can do to turn that sabotage around into success, and gives very specific instruction on what traders need to do to focus on to get into the success zone more quickly. All right, so I hope you enjoy this interview. Let's go ahead and begin, and let's bring Kevin on. Today, I want to talk to Kevin about something different. I want to talk to him about a topic that eludes so many traders. And of course, it's the topic of how can I be successful as a Forex trader? So we're going to take a little bit of a different tack, and hopefully some of these things will really help you out. I'm sure they will. I'm sure even if you get one nugget, it can change the way you see the market, the way you act in the market, how your trading's impacted. That's worth a lot. So Kevin and I will start chatting here in a minute once I undo his mic. And then if you have any questions, please feel free to type them in the chat box. Or if you want to do an open mic, let's say you want to have a direct question to Kevin and you don't feel like typing a big old long question, just say, open my mic, and I will open your mic. And then that way you can speak directly with Kevin, and we'll see how that goes. All right. So let me find Kevin here in the group, and let me get his mic. All right, so Kevin, you should be on now. Let's do a sound check to make sure everyone can hear you.
It's looking good and sounding good at this end. Can you hear me okay?
I can hear you wonderfully. Can the audience members, can you hear Kevin out there? If someone can, everyone just say yay or nay. Okay, right. Okay, Coral says loud and clear.
Great.
Okay, great. All right, Kevin, well, hey, I appreciate you doing this. And this is really in response to some of the members on one of the first webinars in January asking, Kim, can you have Kevin on again? We would like to talk to him, pick his brain. I hate that term. It brings to mind a horrible visual. But so here we are a month later, and we're doing what members have asked us to do. So Ken says to say hello, Kevin.
Hi, Ken. Hi, Ken.
So Kevin, just to kick this off, you've worked with a lot of traders who mainly are patty traders and some who are not. I know you engage in conversation with other traders. And in your opinion, what types of things have you seen traders do or say that might hinder their success before they even get started? And what do you think they might do or can do instead?
I think one of the things that really does kick in before they start is expecting too much too soon. They look at what's out there, they look at other people, what they're doing, and they'll just expect too much before they even get going. When they do get going, they'll be learning the criteria, whether it's the criteria that we use or any other system they're working with. I mean, take for instance what we're doing. It really isn't that difficult, the criteria itself. But acting on that criteria in a live trading environment, especially when the markets take off, it can be extremely difficult a lot of the time. So one thing I'd say is don't expect too much before you start, and when you start, just don't expect too much. Another thing is, I find it's extremely common, is that it seems everyone is comparing, not everyone, but the majority of people compare their performance and results with yours, with mine, and with some of the other patty members who are making good profits. Now, no one should compare what they're doing and what they're getting with anyone else. None of us should. It's, sometimes I'll outperform you. More often than not, you'll outperform me. And we see the Patty members outperforming the pair of us too. So you should never compare your performance and what you're doing with anyone else. Just do the best, with what you've got and what you can do, and build on that. But if you start comparing or expecting too much, you're going to doom yourself a failure. You'll always be beating yourself up when you have a bad day or you're not doing too well. Some traders, I've seen when they first start out trading, I've seen it with Patty members, they'll continue incorporating methods that previously taught them, so they'll be using methods and strategies they learnt from another system. So, they'll be taking that into account. They'll be looking at Patty criteria, but they'll also be incorporating the old system with what they're doing with Patty. And so they'll be looking for things like support and resistant levels when our criteria is showing an entry, or looking for patterns to try and tie them in with what we're doing. You can't do that. The thing to do specifically with Patty is that you need to start with a blank canvas. Don't look back on anything you've done before. And I would imagine that this will work with any strategy or any criteria that you're working with. Don't look back on anything you've done previous. Start with a blank canvas and just apply what you're learning and what you're doing with the criteria that you're working with at that moment in time. One other thing, there's another thing as well, is taking trades with what we're doing. Taking trades before the open or when there's nothing going on is something that I've noticed quite a lot. So we should only get into trades before the London session or before the New York session if there's been significant moves in the market on any given currency. This morning was a good example for it. It was the Japanese yen. When I started setting the charts up, I was seeing the Japanese yen moving. I think it was 3 trades I jumped in on this morning, probably an hour before the London Open. But that was justified to me because the moves were there and I took them. But so often I see people that are starting off just starting to trade before the sessions and there's just no price action at all. So, doing that, starting before the sessions open, it might work in our favour, it might not, but I'm always willing to take that one shot if the markets have been moving. So a lot of the time I see that with the newcomers, people just starting out is jumping on board before they should do when there's no price action before the sessions start.
Yeah, and I would agree with you. I think this morning in the London session was a great example of that last thing you just said, because it is rare. I mean, it's very rare that I see London session traders, you, of course, as the leader, taking those trades. But there is confirmation to take them when there have been big moves overnight, just like we do in New York. There might not even be a news event, but we come onto the screens and an hour and a half before the New York actual open, we can take trades as long as it's confirmed, justified, warranted by the price action. So sure. I agree with you. And I think the first thing you said about expectations, expecting too much too soon, is so important. And that is because a lot of traders come in from the hype of something else and someone else who says to them, you can make thousands, or, hey, start with $200 and look, after a year, you can be a millionaire. So their expectations are not managed very well, and it's not necessarily their fault. But of course, once they come to us, I don't even go into that kind of hype, nor do you. Because it's just not true. It's not the reality. The other thing you talked about was comparing results to others. Very important. There's no way that someone who is maybe 2 years into Forex trading or in their first year could even think that they could do the level of trading that someone like myself or others who have many years. I've got 17 years. I'm going on 17 years. Or Ken or you. There's just no way. But what I would like traders to do in this group is that if you find there's days or sessions when you're the only one that's losing and everyone else or most everyone else is having a profitable day, then there might be something going on in your trading. So in that case, it's not comparing yourself, but it's saying, benchmark me against my peers. So how am I doing in relation to the group of traders and not specifically one trader? So yeah, I think those were great comments. Coral says, but we do aspire. Yes. And that is good to have aspirations. Very good. So, and then lastly, I just wanted to say, because I can't help talking too, mixing up systems, that is such an important thing, because I too see that. And I get some weird tweets from people that aren't members, and then weird tweets sometimes from members or new members. And they're putting all sorts of spins and bringing in systems and mixing it all up. And I just say, I can't answer their questions a lot of times, because we stick to one group of criteria. And I'm not saying, I never say, hey, everyone, you have to do it my way, because that's not true. I'm just saying, hey, here is a way. It's a proven way. And if you want to jump on this, I suggest you do it with both feet versus bringing in 50 different things. Now, if you get the foundation down on one system and then you want to add in something slowly, be my guest. You know, that's fine. That's cool. All right. So the next thing I wanted to ask you about was traders can sometimes waste a lot of time and energy and maybe don't focus on some of the things that they should focus on to improve their chances for success. And do you have any recommendations on what they could focus more on to open up their chances for success?
Things to focus on, yeah, but certain things that they should try and avoid as well. I've seen many newcomers trying to predict what a pair will do, compared with previous price action, for instance. So, they'll be looking at the market that day and take into consideration what's happened the day before or the week before. So I don't know, trying to apply the information that's in their head, like a prediction, as to what they're seeing in the moment that they're trading, trying to link the two together, which you can't do. Each moment is entirely different. So their focus should be on looking at the price action, getting a feel for where the money's moving, rather than looking back at what happened the day before or the week before. So no, it does happen. You see these great moves, you get up the next day, you're ready for the markets, and it's almost like you're expecting something similar to happen again, but you can't do that. You just need to cut off and start from scratch again. Because one thing is, don't predict, or don't try and predict. Yep. Some wasting their time by not following the rules, or they bend the rules. It happens. I know it happens. Try to imagine, when you're trading this, just try to imagine that you have someone looking over your shoulder each time that you take a trade. It's like when I'm working now one-on-one with the members. With that, they're seeing my screen live, and they're looking at my screen as I'm trading. Now, there's no way on earth that I could place a trade that hasn't hit criteria while I've got a member sitting there looking at my screen. You just couldn't do it. And it's something I wouldn't do anyway. I did make, you make a mistake every now and then. I made a mistake on one occasion whilst I was working with a member. I think it was a range break that I took, and there was less than 2 minutes left on the active candle. Now, that member, he was too polite to say anything, I think, but I'd noticed it suddenly, and I mentioned it, and of course I just punched out of that as soon as I realised my mistake. Even though the trade had started to move into profit, I punched out of it. It was a trade I had no right to be in. So every trade that I take has to be exact criteria. Try and do the same. Try, when you're trading, to imagine that Kim's looking over your shoulder, or someone's looking over your shoulder, and hit the button in the right place, or place your orders in the right place. Don't worry about missing out on trades that you've missed the entry on. You're just wasting your time. If you're bending or breaking the rules, you're wasting your time, and you'll probably end up losing money as well. A lot of time, I think, is wasted by not fully accepting. More so in the early days, I see that as people graduate, as they come through working with us, it seems like they realise it more and more. But early on, they don't seem to accept or understand just how important the psychological aspect is. And I know we always bang on about the psychological aspect, but it is so essential. It really is. Like I say, I don't think they understand the full implication as to how important it is to what they're doing, and it will affect the outcome. Almost all of their time is spent looking at the charts and looking at the technical aspect, and very little time spent looking at themselves. So try giving more time to understanding why you do what you do in certain situations. The one thing that's really helped me, I've mentioned it before on the weekly emails that I put out, but one thing that's really, really helped me a lot, and there may be some people raising their eyebrows, is meditation. Now, I'm not saying that you need to sit chanting or listening to chimes, cross-legged on the floor with cramps sitting in your legs and uncomfortable. Just start by spending 10 minutes each day, if you can, in a quiet environment, sitting in a chair, and just empty your mind. Just sit in silence and empty your mind and just concentrate on your breathing. And that concentration on your breathing will take away from what you're thinking about in your mind. Now, when you start doing this, your mind will start zooming off in all kinds of directions to start with. But each time that it does, just realize that it has to come back to concentrating on your breathing again. And the more you practice, the easier it will be to empty your mind. And it really does help. And I know for a fact, I mean, I've read about it and I've seen interviews with many, many successful traders who swear by the positive effects of meditation. Not just traders, like top business people like Richard Branson, people like that. They all swear by meditation being one of the biggest aspects of their success. Now, if it's good enough for them, if it's good enough for the likes of Ray Dalio and Paul Tudor Jones, it's good enough for me. So that's something that really, honestly, has made such a difference. It really has, by clearing my mind and spending, even if it's just 10 minutes a day, a little bit of meditation to clear my head before I trade. And one other thing is, what you should do, is try and turn negatives into a positive. And when I say that, I don't mean a losing trade, turning a losing trade into a winning trade. What I'm talking about is gaining from a negative. So on a losing day or a losing month, look at the way you control yourself. Look at the way that you stick to the rules. So you've lost, okay, you've had a losing day, a losing week, a losing month. That's done. There's nothing you can do about that. But look at the way you traded. Look at the way you controlled yourself and the way that you stuck to the rules. Look at the way that you manage the loss and manage the way that you deal with the emotions. And then you can see that as a positive. So even in a losing week, if you've done all of those things right and you've controlled yourself well, there's a positive. You've taken something good from it.
Love it.
And that's it.
So a couple comments. Ricardo says that's why he likes to post his results on Twitter. It keeps him accountable, whether good or bad. And I second that. And I know Kevin does too. It's why we post ours. It is what it is. And we want everyone to see that, hey, we're out there in the trenches trading alongside you. Alan says, I wish I could do it. It is so hard. Talking about meditation, I believe, Alan. Oh. So, here's something for other people to consider. He said yes. And Kevin, I'm just going to talk for just 1 minute. I know that sometimes people think you have to sit and meditate. You don't. There's forms of meditation that you can do, walking in nature, nothing. Just the sounds of nature can be a form of meditation. There's open-eyed meditations. There's so many different ways to meditate. You don't have to sit. So if you're someone maybe who is like me and I can't stand sitting for too long, and trading sometimes just kills me having to sit, I like to do my meditation quietly out in nature, just walking, brisk walking. And that does wonders for the head, clears it. So you can get the same effect that sitting does too. Mm-hmm. And then Alan says, I've been losing for 5 years, but oddly, I feel like I'm getting better. That is great to hear. Yeah, and I've been watching your trading. You've been doing pretty darn good managing yourself and managing your expectations, Alan. So kudos to you. That's good to hear. He says, I just can't get winning weeks. Well, that's next to come because you are getting winning days. So, yeah, Ken says, if you try to turn a losing trade into a gain, most of the times you lose. A trade either works or it doesn't. And that is so true. And Woj says there is a great app for guided meditation. It is called Calm. For beginners, it's very useful for the iPhone. So it's called Calm. And then there's one that I know a lot of people use, and I have on my phone, called Headspace. Yeah. There's a lot of those apps out there that you can use. Yeah. And whatever works, figure out what works for you, and then just do it. So that's good. All right. So here's one question that I know people are probably going to be interested in. I'm always interested in this, and this is the fear of losing money. It is a big thing for so many traders. I've experienced it. You have as well at different points. And do you have any advice or insight that you can give to traders who have this fear of losing money and fear of controlling their trading to help them alleviate some of that fear?
I'll try by giving you my take on it and what I've observed, because I have had it, seriously had it, and lost money in the early days. But when you look at it, the reason with trading, the reason that people decide to learn how to trade can be for many, many different reasons. It can be to be able to work from home, for location freedom, to be able to tell, I don't know, their tyrant boss to stick his or her job and no longer be at their beck and call. They can take up trading for so many different reasons, although any of these reasons, to become a reality, every one of them and every one of those who are learning to trade will have one thing in common, and that is the need to be able to make money. To make it work, eventually you need to be making money. So you need to make money. Now, the big problem here is that losing anything, because we know that even when you're a successful trader, you'll lose money sometimes. The big problem is that losing goes completely against the grain for human beings. Losing a job that you love doing, losing even your car keys, I know as a child, losing in a race on a sports day. If you're in a relationship with someone that you care about and that person wants out, that feeling of loss is something that, you know, you would have done anything to have avoided, and in some cases at any cost. So loss for most human beings is totally, totally unacceptable. So the newcomer coming to trading sits down, and although following the criteria and getting it right, any criteria that they've learned, you know, they sit down, they work on the criteria, they get it right, and then they get stopped out on 5 trades, one after the other. This situation is completely unacceptable to their psyche. The negative emotions kick in, and then anything goes. And once anything goes, you know, you can get the revenge trading. They'll do anything to try and get that money back. And this scenario is probably the most common cause for traders blowing up their accounts. And I'll put my hands up. I did this when I started out. I blew up, it was only a small account, but I did that. I lost that account simply because I couldn't accept the fact that I was losing, and I tried anything to get that money back, and it just didn't work. I lost more money and blew the account. So what did I do to get over this problem? Well, what I did, I pulled right back. The thing about losing that money, you get to a point where you accept, yeah, you will have some losers, but it's about the management, isn't it? So I pulled right back on how much I was risking. So I don't know, let's say you were trading with a capital of £5,000. Risking 0.5%, you'd be trading with about, I don't know, about 0.26 of a lot. So 2.6 mini lots, say. If you're finding that the losing trades with that amount, with that risk, is too much to bear, then cut your risk to 0.25% on each trade. This will make your losing trades much easier to accept. So the problem with that, of course, is you cut your lot size, so any losers are going to be much smaller. But in itself, when you do have a winning trade, it's going to spin it around. You'll start to feel regret then. So you cut your lot sizes down, so you're risking 0.25% on each trade. You're losing. You don't mind that so much. Suddenly, your trading turns around, and then you start winning, and then you start to get that regret that, you know, if you'd have stayed with the 0.5%, those winning trades, you would have been making twice as much money if you'd have stuck with the original amount. So the answer, for me anyway, is to try, well, how I did it. I traded at a level that wasn't too painful when I lost, until I was consistent. And then once you find yourself consistent, you can see like you're having a few losing days, but more winning days and bigger winning days with that level, with that smaller level, and you're trading, and you're trading until you gradually build again, until you gradually get back to the 0.5%. So once you get consistent, you gradually start building again and building again your lot sizes until you get back to the 0.5% risk. If during that increase you find that the pain of losing starts to kick in again, then you need to cut back a little bit again, just to get that feel for feeling okay when you're losing, which allows you to move forward and get to a winning position. And the way I've found that I get around it now, I mean, even now, I don't like looking at that monetary value of a 0.5% risk. So I found the way around it is not to look at the loss of the 0.5% risk that I'm losing. I've got two accounts. So one with a small trading capital. My first trading account has got a very small capital in it that I actually work with when I trade. And that small account is mirrored to my other account, which holds the majority of my trading capital. Now, I'm not dumb. I know full well that the larger account is taking the same percentage loss or gain as the smaller account that I'm actually seeing on the screen. But I just find it works better for me. The moment that I'm in the trades and the moment that I'm seeing those trades taking place, seeing the vastly reduced amounts that I'm losing or winning, it keeps me on an even keel. It stops me feeling that emotional roller coaster. So the thing to take from that really is, before you can be successful as a trader, you've got to learn to accept the concept of having a loss to be able to win. It's a fact that you'll have losing days or weeks. Learn to accept it. It's just part of being a successful trader.
Love it. I think what I'll do is read some of the comments to you. So that was a very good advice for everyone who was listening in. Ken says, everybody doesn't like to lose. Who likes to? Yeah, that's true. No one does. Hey, we learn to roll with it is what the difference is. So Ricardo says, I have a weekly goal of 25 pips since I've just started. Is it best to stop at 25 pips, or should I continue to trade even though I've hit my target, in order to get more trades and experience under my belt?
For me or for you?
You can take it if you'd like. I'll chime in too.
Yeah, sure. I mean, I would just say, if his goal's 25 pips, stick at 25 pips and go with that for a while. That's my way of looking at it, until a point where he feels more confident and maybe he can increase that level, or see what his consistency is like regarding the wins and the losses. What do you think? Well,
my only concern about doing that, putting a goal around the number of pips that you make, is that if he has, let's say his line in the sand is 50 pips, he's going to be always negative. So yeah. If he starts the first 2 days off, let's say he banks 25 loss in each day. Now he's down 50, comes into the third day and he makes 25. So now he's halfway up, but then he's net down 25. So he tries to make the 25 the next day, and now the week's gone. I guess what you want to try to do, Ricardo, is, it's good to have a goal, but keep it flexible, because on some of the days, like, we saw today, there was some big moves. There's been some big moves. So don't cut yourself off just to say, oh, I hit my goal. Okay, so it's 50. All right. So is your profit goal 50? Because he just typed something that's 50. So, but you get the point here. We're trying to say, make sure that you're not letting your losses like expand or go to the full, but try to keep your losses under control and let your profits, if the market's moving, you want to try to capitalize. It's kind of like practicing how I trade, which is, I have a definite, line in the sand for me overall. But I don't have like goals as far as how many pips I want to get in a trading session or in a week or in a month. I let that show itself to me, and then I will work a market. Like I, happened to see those big moves when the Dow was crashing on Monday. I worked that. I worked it really hard because there was a big opportunity there. And I worked it as much as I could. So you want to like keep the losses under control as much as you can, but then be open to profitability. What happens with newer traders or newer to this even is that they're getting out at levels. They're unable yet to read the price action. So you can't be too hard on yourself. And you can't expect yourself, like Kevin said, you can't compare yourself to others. All right? Okay. So he said, thank you. Alan says to you and me, did you or Kim ever put limits on yourself, such as a 50 pip line in the sand, closing all trades when you hit a certain profit? I think Kevin's a master at closing all of his trades. Remember that one webinar I did where I said, you know, you don't have to trade like me, or, you know, Kevin and I have a very different style on getting out of trades, if anyone's ever noticed. So Kevin, why don't you tell them, for people that don't know, because there's some newer people in here that maybe don't know your style, because it's quite different than mine on exiting trades.
It's just something that I've stumbled across, really, and it's more about how I feel. It's more, I mean, like you say, was it day before yesterday when you sat there, you were working for a real long time and you kept pushing those trades, and I was flicking on and just having a look to see how you were doing and seeing how the markets were moving, and I'm thinking, well, I would have been well out of there by now. But it's not, I don't know, it's not a fear or anything like that. It's about how I feel. If I start to feel a bit tired or fed up, I mean, today was a perfect example. I apologise to people who are in the London in the London trade plan today if I sounded a little bit vague this morning, because I was feeling really rough this morning. I don't know why. It might have been something to do with the travel we've been doing recently, but I was just feeling really rough. So I came into the markets. I had some good trades running, and it started to move fast. And I really found that I just couldn't get my concentration right. I was missing out on screenshots, which I never normally do, and which is why I put those results out how I did. I did them after the event, and I got to a point where I thought, you know, I just can't be bothered with this. I checked, and lucky enough, I was up 122 pips, and I just punched out of everything because I just had enough. Now I saw those trades moving, and I know, you know, you in the same scenario, you would have been pushing those and pushing those and pushing those. There'd have been no take profit anywhere near where I was. You would have been pushing just the price stop down to follow those trades through. But for me, it's more like how I feel in the day. If I've had enough, I feel a bit tired. I sometimes have other things to do as well. So I'll just see if I've got a reasonable profit. You'll find a lot of the time, if I'm down, that's when I'll stay long, and I'll keep. It's not revenge trading, but it's recovery trading. That's right. Trying to pull some of those pips back, and I'm not sitting here beating myself up or anything like that because of what's going on. It's something I can do. I'll stick with it and do that recovery trading. But when I'm in profit, if it's summertime and we fancy going out for a drive somewhere in the country, I'll just say that'll do, and I'll close everything down and I'm out of it. And it's not something that I've really devised a plan around. It's just what I see in front of me regarding the amount of pips I've made. I know what I've done for the rest of the week or the rest of the month, and I think, yeah, that'll do, and I'll just jump out of it. Reasonable amount of pips. There's nothing specific that's drawn up. It's what I see as a reasonable amount of pips, and I'll just jump out and be happy with it. Even if the markets carry on moving, and I see you trading 3 hours later with another 180 pips.
Yeah, but remember, you've been up probably, your day starts while I'm sound asleep. So I get it. I mean, there's days too where I just go, there was a couple weeks ago where I kept waking. I would wake up to my alarm clock at 5 a.m. and I was deep in the middle of dreams. And so I was in REM, and I was so discombobulated. Even an hour later, after having coffee and getting on the trade planning sessions, I was, you know, saying EU when I meant to say EJ. And it was just very discombobulating. Some days, like yesterday, after having that big day on Monday, 17 pips positive for me yesterday coming out of that session was good enough. I was like, I have to get out of here. I just want to walk away. And the other thing I want to say, Kevin, is like this morning when you booked your 122 pips, sometimes especially given the market conditions we've had in the last year and a half, that's like a really big day.
Oh, it is.
Like Monday was a really big day that is so outside the scope of what we've been trading in that you have to keep in perspective that, hey, this doesn't happen all the time. It used to happen 2-3 times a week. Now it doesn't. So when you have a big day like that, the next day you go, you know what? I want to keep that money.
That's right.
So yeah, it's not this hard and fast rule for either of us that we say, oh, we're going to get out here. But we are hard and fast when it comes to how much we will tolerate on the losing side. That's where you have to be hard and fast with yourself. And for each person, it's different. But you have to have some, safeguards around how much you're willing to lose. But as far as winning and when the market's moving and it's warranted, then that's when you can try to press a trade. So Ricardo says, okay, wait, let me go back up here to Alan, because I saw that Alan said something. Oh, Paul says risking 0.25% per trade has kept me in the game, even during some really rough periods. Yeah,
great.
That's mine too.
That's good.
Question to Kevin from Woj. Kevin, past 2 years, please tell us your key moments that grounded you mentally as a trader. What are your most important stepping stones?
I think there's one thing that still sticks, and I can remember I spoke about it in the interview that we did whenever it was, way back. And there was like a light bulb moment, and it was the re-entries that you see what it was. I was early into trading with Kim's criteria. I'd be taking trades, I'd have a few losses, I'd start hesitating, I'd start pausing. And one of the biggest turning points for me was realizing how important the re-entries were. Now, looking back on it, it's almost I feel quite embarrassed about it, thinking, why couldn't I see that at the time? But now, at the time, it was incredible. It was suddenly, wow, I started to be brave, I suppose, and start taking those re-entries all the time. Not when, it was going ridiculously wrong, but, more positive with those re-entries, not hesitating, just taking them. And that was a turning point for me, believe it or not. It was those re-entries that made a massive difference to me. And it was like a light bulb moment that just hit, and that's when things turned around for me.
Yeah, those re-entry trades, you have to be brave. And but the more you do them and attempt them, especially when the market's moving, it will turn your trading around. And like for maybe some of you, it will turn a light bulb on in your head. So I think, Paul, that answers your question too. Really, that's one of the key learnings that Kevin had. And I don't know, Kevin, do you have any more to speak about your, as Paul says, amazing consistency and results?
No, not really. It's just doing
Kevin?
what you've said, following the rules. And
here's what I can observe from Kevin, if you don't mind me. Sorry for interrupting you. What I've observed with Kevin is that he has taken the Patty criteria and he hasn't tried to modify it. He hasn't tried to add anything to it. He hasn't tried to take anything away from it. He's just said, okay, I'm going to do what this person is telling me. I don't know her. I don't really, I just know I see her, observe her results. I've listened to some interviews on other podcasts. I'm just going to do what she says and see what happens, see where the chips may fall. And now what I can hear when Kevin works one-on-one, because Kevin does do one-on-one work with traders, is that he's like a mini me with the criteria. It's like, oh, I got into a trade, like he said, I got into this RBO. It's a 2-minute rule violation. I'm getting out of this trade. That's it. I've got to figure out my reentry if I want to get back in, but I'm cutting the trade. I'm not going to put myself into a psychological state of mind that says, well, if it works out, then I've made 20 pips. No, I'm going to play by the rules and then let the chips fall where they may. So he's diligently committed to following a set of rules and actually applies the rules daily when he trades. And two, the other thing I've seen him do is he's really taken advantage of Mark Douglas's Trading in the Zone. He has it on his website. He's studied it. He's listened to it. He's listened to my trading psychology webinars. He's understood that, okay, he's very good technically. He's a good technician. He knows the rules. He plays by the rules. Now he understands the next phase for me is my head. And it's an ongoing process. I think you would agree, Kevin. You don't arrive and say, okay, I'm cured and I've got all my psychology. No, you don't, but you have checks and balances built into yourself that keeps you in line with that psychology. So you know, hey, you know what? I need to walk away. I'm feeling something. So I think those are the two main things about Kevin, the psychology part and the fact that he is such a good technician and he just trusts the system. Alan says, do you think stopping at 50 is a good thing to do? Because it also stops you from maybe pulling some back. You can go ahead and answer that if you want.
As someone who's not been trading that long, yeah, I do. I think it's a good idea. Mm-hmm. Although you'll often see me on Twitter and I'll be 70 odd pips down. And reason for that is that I'm confident. I don't know that it's going to happen, but I'm confident that I can recover even part of that. Usually I can bring it back to less than 50. Yep. Now, I know that sounds like a bit of a bolshy statement to make when no one knows what the price is going to do, but I know so often I've managed to pull it back. So, and the other thing is I'm looking at what I've done for the rest of the week or the rest of the month, like the previous trading sessions in the week or the month. And fortunately, I'm usually up. And if I'm 70 pips down and that's how it finishes that day, maybe slightly over 70, I really don't mind. I can walk away from it and I know that I'm still in profit and that I will make profits later on in the week or the month. But no, when you're starting out, I do believe that 50 pips is very important to keep it 50 pips or below. Just until you get that confidence and you feel comfortable with those losses. Don't let it go too far. Don't lose your account before you're trading it successfully.
Yeah, I agree with everything Kevin said. So that would answer your next question, Alan, which is, yeah, you can go deeper. Yeah, you can go deeper once you get the experience. And part of that experience, too, is reading the price action, Alan. So on certain days when you actually have a good view of the price action, and it's also like, I want to say intuition or feel, but with screen time and experience, you start to develop that skill of feeling and sensing. It's like on Monday, I put out a tweet before all the yens moved like gangbusters. It's like I was ticking through the charts and I could feel and I could see that something was happening. I had no idea that the stock market was about to crash. But I said, I gave an alert to everyone, the yens, there's something going on. And it's never me. I'm not trying to be a special snowflake about this, but it's this skill because of looking at charts for so many years that you start to sense it. Yeah, so Alan says, I feel like I'm getting good, but still am not consistent. So infuriating. Hey, be easy on yourself. Yeah, Ricardo says, I think the 50 pips loss is a good line in the sand for newbies. Yeah, it is. Definitely is. Mm-hmm. Woj says, Kim, the yen tweet is a legend. Yeah, well, I'm like, time to re-up this tweet. Yikes. But, again, that doesn't happen all the time. So when was the last time I saw big moves in the yen? I can't even remember. It's been so long. It's been years. So, that was just pure luck. Just pure luck, too, that I was sitting here trying to dig out of a hole and I was doing some other work in my office and, periodically coming to the charts and see if I was out of my hole. And I was like, uh-oh, something's going on. I don't know what it is. I don't need to know what it is. That's what's so beautiful about when you trade price action. So, Anyway, on this last slide that I just put up on your screen, if you want to email Kevin and, you know, talk to him about his one-on-one work, there's his email, kevinhunt001@gmail.com. And of course, most of you know him out on Twitter as UK to Asia. And then the last thing is that, Kevin, I just wanted to mention to everybody, you recently wrote a 9-page mini ebook titled Forex Trading Success in 5 Steps. And I just wondered, some people don't know about the book, and maybe some people are here because of the book. But if you can just tell them very briefly what those 5 steps are. And this is for someone who's just getting started, really, so not for more advanced traders. So take it away.
It really is. It's just purely for people who are starting out and you know, very, very early stages of Forex trading. And the 5 stages are simple. One is the psychology, and it gives a little brief explanation about that and links to what you can do about gaining that psychological aspect that you need. 2 is the broker. Look at the brokers, review the brokers. I've recommended my broker simply because I've worked with them for a long time and they've been good and their spreads are small, which suits the way we trade. Which pairs to trade? Again, the pairs that we trade, because the spreads are the smaller spreads. You can, with this criteria that we're trading, you can trade any pairs you want, but the pairs that we trade have got the smaller spreads, which suit the tight stops that we use. Number 4 is the risk management, and I just go through using the Baby Pips lot size calculator. Number 5 is strategy, and of course, strategy just points in one direction, which worked for me, and that's the Price Action Traders Institute, because that's what worked for me. It's as simple as that. And this mini ebook, like I say, it really is for someone who knows absolutely nothing at all, who's just really just starting to get into it. It's something I just stumbled across. I had a PDF document on my computer that I'd send out to people who were asking, what, you know, how did you become successful? What did you do? I tested the Amazon platform. I put it on there. I published it on there just to see how the Amazon platform worked, because I'm writing another book at the moment. And left it on there, forgot about it, no promotion, nothing. And then suddenly I've started to see sales. You know, I'm starting to get these royalty checks coming. Not a lot, but big sales in Japan, and it's moving on. So, yeah, that's aimed, like I say, really at people who are just starting out. And it might help some of the people who are listening into this who've not had any experience at all.
Yeah, and we'll probably put a link up to it, Kevin, so that people, if they want it, can get it from you. So.
Right.
And then Alan has one question. Kevin, is it correct that in the UK, any income from Forex is not liable to income tax?
Depends how you treat it. Well, I'm not a tax expert, believe me, but I believe if you're working as a spread betting platform, there's no tax on that. Trading the way we do, I think that there is. So, but don't quote me on that. You need to speak to an accountant or someone who specializes in that subject.
And I'm a CPA in the US, and I would still recommend that you have to talk to your own personal accountant. I know nothing about UK tax law, but it is taxable here, and it depends on what kind of tax it's taxable. So depends on if you do it full-time as a business, as your main source of income, or if it's in addition to other income that you have, and you might be working a full-time job. So different rules for different people with different situations. So everyone needs to speak to their own professional on that. All right. Well, Kevin, I want to thank you. You gave some awesome insight to everybody, and I know that the people who have attended, thank you for your good interaction. And Kevin and I both appreciate you. And Ricardo says, excellent webinar. Alan says, thanks. And I guess we'll sign off. Paul says, that was great. Got a lot from this chat. Thank you to both of us. So Kevin, thank you. Enjoy the rest of your evening. And I'll see everybody tomorrow for the New York trade planning session. Kevin will see you for the London trade planning session. Don't forget, we have a big, big UK interest rate announcement. Very ungodly hour for us here in the U.S. on the West Coast. It's 4 a.m. my time, so I don't know if I'm getting up for it, but we'll see. All right, so thank you again for showing up and interacting, and everyone's saying thank you, Kevin. So thank you, and I'll see everyone tomorrow. Okay, well, I hope you enjoyed that interview with Kevin as much as I did. when I did it with him. And if you have any more questions, you can either email me at priceactiontradersinstitute@gmail.com or go to our website at priceactiontradersinstitute.com. And I'll be happy to answer any of your questions. All right, thanks. That's it. Have a great day.